Hello everyone, Giridhar here. In this video, we are going to see Union Budget 2025 and what are all the terms being used in budget, how it is being proposed at the Parliament, and most importantly, what are all the schemes and plans proposed in this year budget. Okay, the first thing is the lock-in period and the halwa ceremony. This video is going to be from the basic to the advanced, so I am covering all the from bumper to bumper. Okay, the top to bottom level. The first thing is lock-in period. Lock-in period is the period before the budget is being proposed at the Parliament. February 1 is the budget date. Before the February 1, that means before first last week, January last week, will be the lock-in period for all the officials who are going to be involved in that budget. Okay, mostly the finance ministry officials will be in the lock-in period at the north block in the parliament to isolate themselves from the external economy, sorry, external environment, to maintain the secrecy of the budget. There will be no mobile communication in that period. There will be no email communication in that period. So they will just literally lock themselves inside a budget hall and they started their budgeting work. Okay, once the budget has been work has been completed, they earmark it as like a celebration of halwa ceremony. They will do the halwa on the last day of completion of the budget, and before proposing it to the parliament, they celebrate it as a ceremony by distributing the halwa sweets to all those officials who are all involved in preparation of that budget. Okay, the next thing is but now jumping directly into the budget, we will see the details of basic things which we are going to use in the budget. Then only we can understand the full essence of the budget. The first one is annual financial statement. This is the official name for the budget. In colloquial language, we are calling it as budget, but the original term for it, official term for it is annual financial statement, which was mentioned in the Indian Constitution as per the Article 112. Okay, so it has to be union annual financial statement. Okay, so first we will see the three estimates. These estimates, these names you may have seen in the budgetary graphs or in the budgetary speech. We will see one by one what it is. Budget estimates means for the upcoming year we are going to allocate some part of fund, that is called budget estimates. Revised estimates means for the previous year we are making some correction in the previous year allocation. Okay, provisional actuals means the actual amount of expenditure has happened in the previous year. Okay, maybe this may confuse you. Let me give you a simple example, but only for the understanding purpose only I am going to say. Suppose in 2023 budget, the budgeted amount was 100, they have mentioned. Okay, so, as per the budget, before March 31st, 2024, the 100 crore amount should be utilized, correct? But in January 1, 2024, they are analyzing their performance of the budget, whether 100 crore we have already allocated, all those 100 crores has been utilized properly or not. Okay, they will analyze their budgetary performance. In January, they found that 100 crore is not utilized, only half of it, 50 crore has been utilized, and based on the current trends only 50 crore is enough for the for the past period. So remaining period 50 crores, another 50 crores is not needed, which is surplus. We can take only 20 crores from it, so 50 plus 20 will be the 70 crores is enough for the previous year. So remaining 30 crores will be the surplus in the previous budget. Okay, so what they will do, initially they have declared 100 as the 100 crore as the budget, but due to the analysis of their budgetary performance they have brought it down as 70 crores. That is the revised budget, so that 30 crores we may use it in the next year. Okay, so this is the revised estimates. They are budgeting one amount, and based on the expenditure, based on the actual expenditure, they are revising it at the quarter end, last quarter end of that financial period. And the next year, for the next year, April, from April 1, they are devising a new budget for the next financial year, that is budget estimates. Okay, I hope this example may give you a better understanding. Okay, the next thing is stages of budget. Okay, what are the stages in the budget? February 1 is the budget day. They will propose the budget. Okay, so that's it. They won't do any discussion on the budget day. They will propose the budget, and all the officials will go home without any discussions on the budget, because that is the presentation day. Once the presentation has been done, from next day or from next week, 2 to 3 weeks, general discussion will be happening. General discussion means they will discuss the things in detail, all the things which have been mentioned and proposed in the budget. Okay, so there is no objections or there is no voting mechanism involved in the general discussion. So next thing is scrutiny by departmental committees. Around 24 departmental standing committees are there. They will scrutinize the your budget. The finance minister proposed the budget, right? So those 24 standing committees will scrutinize the budget. Based on their demands, they allocate some grants for them, demand of grants for them. For example, finance ministry has proposed the budget. Education ministry going is going to prepare 100 crores is our need in this financial year, so please allocate 100 crores for it. So like that, likewise, pharmaceutical industries, commerce ministries or education ministry, or MEAT ministry, all the respective ministries preparing their own demands in the financial year uh, to get it approval from the parliament. Okay, that is called scrutiny. So they will scrutinize the proposal and come up with their demands. So voting on demands for grants. So the next day, voting on demands for grants. That means voting will happen. This is the only privilege which is only available in Lok Sabha. There is no dealing with this in Rajya Sabha. Only Lok Sabha will do the voting on demands for grants. Which means, suppose education ministry is raising their hand and proposing, we are in need of 100 crores in this financial year. Likewise, we have to allocate. They will give their suggestions. This much amount is needed in the upcoming financial year. Please allocate like that. So those who are all accepting it, they may vote for it. Those who are all rejecting it, they won't vote for it. It is happening only in Lok Sabha. Okay, so once the voting is done, it will be going to the appropriation bill. Appropriation bills means all the funds in the government of India, right? We cannot The government cannot take it without the approval of the parliament. So appropriation bill is must. Okay, once the budget has been finalized, proposed. Okay, otherwise without appropriation bill, there is no licensing authority to take the money from the government without the parliamentary approval. So appropriation bill is, once the voting has been done in the Lok Sabha, the voting details, those happening details will go to the president. He will sign it and he will accept his acceptance. Then only it will come as a bill. Okay, the bill has been passed, so the government can utilize the money in the consolidated fund of India. I will tell what is the consolidated fund of India and those types of funds in detail in next slide. Okay, then the next one is passing of finance bill. Finance bill is bills related to taxations. Appropriation bill is like, to utilize the money from the government, the government need to gets an approval. That bill is called appropriation bill. Finance bill is, the government is doing some modifications or any changes in the taxation, indirect tax or direct tax. Those things are, those bills also needs to be passed as a law. Okay, after the approval, that is called finance bill. These two bills, appropriation bill and finance bill, are called as money bills. They will say money bills. And the next thing is motion, cut motion. There are three types of cut motion in budget. I have said you right. This one, voting on demands for grants. Those who are accepting the proposal of any ministry can vote for it, like correct. But those who are denying it can raise these three motions: cut motion, policy cut motion, economic cut motion, and the token cut motion. Policy cut motion means, suppose a ministry is proposing a policy. Okay, and the people in the Lok Sabha feels the policy is not valid and it won't work in this economy. So what they will say, policy cut motion, the policy itself is wrong, we cannot approve it. This represents the policy cut motion. So amount of the demand, suppose education ministry is asking 100 crore for the upcoming economy for a policy. Okay, the policy cut motion will reduce the 100 crore to 1 rupee, which means the policy itself is totally a failed one. We cannot approve this. It is simply rejecting a claim. Okay, the next one is economic cut motion. Economic cut motion is same, suppose same education ministry is asking 100 crore for a policy, but the Lok Sabha members feels that 100 crore is not enough for this policy. We can make it as 75 crores. 75 crores is more than enough to do this. You don't need to go for 100 crores. So they will reduce substantial amount of money from the claimed amount. That is economic cut motion. And the next one is token cut motion. Token cut motion means, suppose a ministry is proposing an idea or policy. That policy has some grievances, some loopholes in it, so that things needs to be discussed right away at that time. So they will use this token cut motion. Once the token cut motion has been started, only issues related to that specific policy or program has to be discussed. In this case, the amount of demand will be reduced by from the amount to the 100. Okay, these are all the three motions they will be using in Lok Sabha to accept or deny the vote on grant demands, vote on demand for grants. So these are all mentioned in Article 113 of Indian Constitution. So next one is guillotine and vote on account. Guillotine. Okay, I will say what is guillotine. So one by one ministry, all the ministries have n number of proposals, right? This much amount we need, this much amount we have to allocate for this department. So daily the discussion keep on going and vote on demands keep on going. But we don't have that much time to cover all the ministries' demands, correct? So what the speaker will do at the last day of discussion, okay, they will settle all the undiscussed proposals at a time. Okay, so the speaker will say these are all the some list of undiscussed proposals we have not discussed in the past days. So this is our last time of this parliamentary session. So those who are all need wish to vote for it, you can vote for it or you can simply deny it. So that is called guillotine, to save the time to complete all the things in a timely, time bound manner. That is guillotine. Vote on account. We have seen, right, I will show the first presentation of budget should taken, and then the general discussion will be taken around 4 weeks, and then scrutiny under the parliamentary session will be adjourned for next 3 to 4 weeks. Then scrutiny by the respective departments, then vote on grants, passing of appropriation bill. So these things around takes 2 to 3 weeks, 2 3 months, maybe 4 months, to complete the whole budget session, to get it signed as a bill. So only the bill get passed, then only the government can withdraw the amount from the consolidated fund of India. Which means consolidated fund means it's like your piggy bank in your home. Okay, that small piggy bank. Consolidated fund contains all the amount which has been collected as a taxes, and all the revenues of the government has been residing in the consolidated fund. So to get it, to withdraw from it, the government needs an appropriation bill to be passed, signed by the president after the budget session has been over. So these things takes around 4 months. So in these 4 months, the government cannot run without uh, taking the amount from the consolidated fund, right? So they will utilize a mechanism called vote on account. Vote on account means, suppose the budgeted expenditure is 600 crores. Okay, for example, I'm saying 2025 budget is 600 crores. 1 by 6th of the amount they can utilize before passing the bill. Suppose 1 by 6 means 100 crores they will take from the consolidated fund of India, okay, to utilize their daily activities. Because if the government cannot wait till the appropriation bill gets signed, because they need to run their day-to-day activities, like, correct? So that's why vote on account mechanism is there, to take the advance amount of money from the budgeted expenditure. That is vote on account. Okay, the three funds of government of India is consolidated fund, contingency fund, public account of India. I already said consolidated fund is all the receivables, revenues, taxes, taxes from the people, indirect taxes, everything, customs duty are going to be collected in this fund only, consolidated fund. It's like a three accounts for the government. Okay, the next is contingency fund. Contingency fund is emergency fund which is being kept aside by the government. The corpus may be 500 crores or 1000 crores depending on the budget. Right now 500 crores I think so. It is like a reserve amount. Suppose any mishap has been happened, any some severe depression in our economy or severe cyclone or some catastrophe has been happening, so we need some backup amount to save ourselves first, correct, to save our economy. So that is contingency fund of India. Next one is public account of India, means all the public money, small savings account, senior citizens accounts money, and then PF amounts, pension amounts, those things reside in the public account of India. So these are the three funds maintaining by the government of India. As these are the things already I have explained. It is mentioning here. So the expenditure from the consolidated fund of India, all the expenditures, okay, for all the for the daily activities of government, but only contingency fund of India, only unforeseen expenditure, because it is a reserve amount, we cannot use it for normal purposes. Okay, and then the authorization from whom we get signed for record prior to expenditure. For consolidated fund of India, I already told, before using it, before withdrawing from it, we need parliamentary authorization. Suppose parliamentary authorization takes time, means we will go for vote on account, I already told. Okay, but contingency fund of India, there is no approval for withdrawing it from before the expenditure. It can be get after the expenditure done. Means why it's doing so like that, means the contingency period is emergency period. In that emergency period we cannot follow the protocols to get the parliamentary approvals and those things and all. First we will do our expenditure to make it, to make all the things back to normal, then we can go for the authorization. Okay, they will accept it because it is an emergency period. Public account of India, there is no need to get the approval from the parliament. So these are all the articles respective of these three funds of India. The next one is the budget, mostly revolving around these flowcharts. I mean these boxes only, the receipts and the expenditure. Receipts means all the receivables coming to the government, all the money earned by the government. Expenditure is all the money spent from our hands. I mean spent from government. Okay. So receipts, there are two types: revenue receipts and capital receipts. And in that revenue receipts we have tax revenue, non-tax revenue, and in the tax revenue itself, direct tax and indirect tax is there. So we are going to see one by one in detail with some appropriate example to get a better understanding in this budget session. Okay, next thing is we will see first receipts. First one is revenue receipts. Revenue receipts means a proper definition is it won't create any assets, and it won't create any liabilities and won't reduce the assets of the government, which means because of this revenue receipts there is no profit and there is no loss for the government. Example is dividend receiving by the government. Dividend means, yeah, sum of profit has been deposited to the government from the invested income. Okay, next is taxes. Taxes paying by the people, those are all revenue receipts. Okay, interest earned. Interest earned means government may have given some loans to other countries or may given loans to states. So those interest they will pay the rate of interest, right? So those things and all comes under revenue receipts. So revenue receipts is nothing but all the taxes, you may say revenue receipts. All the interest earned from by the government are called revenue receipts. And then in revenue receipts, we have two types. One is taxable revenue, non-tax revenue. Now, tax revenue means, as the name implies, that only the taxable revenues, taxable incomes are considered as tax revenues. It is composed of two types. One is direct taxes, and the other one is indirect taxes. Direct taxes will be paid by all the people who are earning their income. Correct. Indirect taxes means for all the goods and services which is being used by people, they will pay the indirect tax for it. Okay, indirect tax example is GST and customs duty. For direct taxes, income taxes, corporate taxes, estate taxes, those things and all comes under direct taxes. We will see the difference between the direct tax and the indirect tax. Direct tax will be lived on your income, okay, income of the earning person. Indirect tax is imposed on the goods and services rather than on income. So what are the things you are going to buy, those things only going to levy the GST, the tax for it. Okay, so direct tax going to be directly paid to the government, whereas indirect tax will be paid through intermediary. I will tell you an example. Suppose you are earning some 15 lakh per annum, okay, as a salary. So at the end of before the end of the year, you will pay your tax to the government directly. Correct? That will be the direct tax. Suppose you are earning something, some same 15 lakh rupees, and you are going to buy one 10 rupees biscuit, means it is mentioned that MRP, maximum retail price inclusive of all taxes, which means inclusive of all taxes it is 10 rupees. So you are going to give the 10 rupee to your shop owner and you are going to get the biscuit. So the actual biscuit cost is 8 rupees only, remaining 10 to 2 rupees is the actual GST, the taxes which you have been paid, but you are not going directly pay to the government. Here you are paying to the shop owner. Shop owner will pay the your taxes to the government. Here the shop owner is the intermediary. So uh, you can understand this difference, right? So in direct tax you are going to pay, in indirect tax some intermediary is going to pay, and direct tax is based on your profit and your income. Indirect tax is same for everyone, because direct tax may vary from one person to another person. Suppose 15 lakh per annum some person is earning, some person is earning 1 lakh per annum, there will be a difference between the direct taxes, right? But indirect taxes will be all same for any people, because 10 rupees biscuit is same for you. The rate will be 10 rupees for you, and the rate will be 10 rupees for even for a multimillionaire. So that indirect tax will remain same. Okay, and direct tax is non-transferable. Non-transferable means if you are earning you have to pay it, correct? You have to pay the direct tax. But in indirect tax, if you are earning you need not to pay. You pay, but you are paying it via the intermediary, so it is transferable. The payment of burden transfers from you to the shop owner to the intermediary, so it is transferable. And next one is direct tax is progressive tax. Progressive tax means the more you get income, the more you pay taxes, because it keeps on going. But indirect tax, the more you are getting income, the less you are paying going to pay tax, which means suppose you are earning 1 crore per annum and you are buying a biscuit of 10 rupees. So 2 rupee will be the uh, taxes you are going to pay. Suppose you are earning 2 crores, the same biscuit you are going to pay only 2 rupees. So the tax amount is constant in indirect tax, that's why it is regressive. The more you income, it will be, the proportion will be less. But in direct tax, the more you earn, the more you will pay that taxes. Collecting this type of tax is difficult, because government have to monitor all the persons to get the taxes collection done correctly. But in indirect tax, they have intermediaries in the name of business, in the name of merchants. So they will pay the taxes of the people once they were collected, and they will forward it to the government in form of GST. Next one is non-tax revenue. Non-tax revenue means all the interest other than the taxes, all the incomes other than the taxes. Here, these are the examples for I have given for your better understanding. Interest received from government. Government may have given loan to Sri Lanka or any small countries, or government may have given loan to states in within the country itself. So those states or Sri Lanka will pay us the interest for their loans. Those income will consider as non-tax revenue. Examination fee they are conducting. Okay, UPSC, SSC and all direct government control. So the examination fee will consider as a non-tax revenue for the government, right? So then penalties, then toll gates, then any administration fee, registration fees and all in the registration office, those comes under those money details. Simple, any money comes to the government other than taxes or non-tax revenues. Okay, that can be any example, and there may be anything. Next one is difference between tax revenue and non-tax revenue. Tax revenue is you must pay it. Suppose you are earning 15 lakhs per annum, you must pay the income tax for it. So that is tax revenue. Non-tax revenue is only payable when you are using the service. Suppose you are not you going to use electricity for your home. Okay, suppose only you pay eb bill if you are using the electricity. You are not going to use the electricity means you are not utilizing that services, then you no need to pay the government for the eb bill, correct? So that is why it is a non-tax revenue is payable only when you are using it, but taxable revenue is payable if you are earning. Okay. Next one is capital receipts. Capital receipts is non-recurring sum of money. Non-recurring means it won't come frequently. It will come as a rare one, but it will come in bulk. Okay. Example is disinvestment, sale of assets like land, buildings, loans, recovery of loans, selling government stakes, grants and aids. Uh, Other than this, how to say this one is, suppose government is having a building, okay, or any land, but it is not utilizing properly as per government thought. So what they will do, they will sell the land and make it as a money, so that will come under the capital receipts. Most of all the disinvestments are what to say, monetization comes under the capital receipts. So loans received raised from domestic or foreign resources. So we are getting loans right from japan companies, japan banks, and from foreign banks we are getting loans. Those are also comes under the capital receipts. And any grants and aids, bill and melinda gates, so those foundations and trust and all giving us some, sometimes they will give us some lump sum amount as our development need, for our development need. So they will grant us their amount, right? So those amounts and all comes under grants and aids. So these are all collectively comes under capital receipts. Revenue expenditure. Now we have finished the receipts. Now we are going to the revenue, expenditure side. First one is revenue expenditure. Revenue expenditure means for this is the expenditure needed for to run the business on their day-to-day activities. For example, giving salaries to all the government officials, uh, paying rent for the offices, and any water supply we are taking means we have to pay for it. For all the services we are going to take, right, we are going to give the money. That is revenue expenditure, which is expenditure from the government side to make the uh, to make the things get done. So the next will be capital expenditure. Capital expenditure means buying or acquiring a property which can be a tangible or intangible assets. The purpose of this is to get the long-term benefits of the property. Okay, so the property can be a buildings or any vehicles, any industrial plants, equipments they are buying. Those comes under the capital expenditure. So once the capital expenditure word arises, the next thing should strike to our mind is long-term benefits. This is not for the short-term benefits. Okay, so the example can be buying a 15-story building or any shopping complex for the purpose of rental benefits. So this comes under the capital expenditure. For the purpose of buying, you need to expend something, right? To you have to spend some money to acquire the property. So those comes under the capital expenditure. Okay. Next will be the differences between capital expenditure and the revenue expenditure. Capital expenditure means, as I have already told, it is long-term asset creation. Okay, today you are going to buy a building. Okay, but today you won't get any benefits. Maybe tomorrow or day after tomorrow or next year you will get the benefits by renting it out. You may get the rental benefits or any lease amounts you can get. So those comes under the asset creation, asset monetization, you can say. Okay, so next, whereas in this case, revenue expenditure means for maintaining daily business operations. Daily business operation means suppose you are running an office. Okay, you have to pay some expenditure like electricity bills, water bills, the employees' salaries, PF pensions. Those comes under the revenue expenditure. Okay, capital expenditure means acquiring the property. Next is capital expenditure last over several accounting periods, because suppose if I am buying a property today, suppose 20-story building in Mount Road, Chennai, today I am going to buy means the benefits of that building which I have bought today will last next year, will last for several years. Maybe next year or after 10 years also it will be useful for me. So the benefits keep on going across the several accounting periods. Whereas revenue expenditure means only up to the current accounting period. For example, if their salary I have to pay to the employee this year means this year I will pay. So there won't be expenditure in the next year. Next year means separate expenditure accounting method for next year. Okay, this year means it will be closed for revenue expenditure, so there is no tracing of benefits over several accounting period in a revenue expenditure, whereas in capital expenditure it will. Okay, next is it is capitalized and depreciated over time. Suppose I am buying a building today means after 2 decades the building value won't be the same. Okay, sometimes it may appreciate in rare cases, but most of the cases after 2 decades it will be depreciating only. Okay, suppose in case of revenue expenditure there is no nothing like that. Okay, there is no appreciation or depreciation. Only at the right time, I mean current period only, you are expending something to run your business, to run the show. Okay, so those comes under revenue expenditure. Next is capital expenditure is non-recurring, involves significant investment. Non-recurring, recurring means frequency of occurring, keep on occurring. Non-recurring means today very rarely people will buy the assets, right? Assets are properties. Even government also, they don't buy daily, right? Any month or any year they may buy, but the frequency of buying is very low when compared to revenue expenditure. Whereas revenue expenditure means monthly you have to pay your bills, electricity bills, water tax bills, property tax bills, your employee salaries. Those things are every month you have to do to run their business. So revenue expenditure is recurring for several time, whereas capital expenditure is won't recur that much like revenue expenditure. Okay, it is non-recurring. Next is affects asset value and long-term profitability. As I say, capital expenditure, if you are buying a property today, the benefits of that property you are going to enjoy in the next 1 or 2 decades, example I am saying. So you have the long-term profitability, whereas in revenue expenditure there is no long-term profitability. Only at the short time you have to spend. Short time means in the current financial year you have to spend this much amount to run your business or to run your system. So directly revenue expenditure will affect your net profit in the business. Suppose you are getting a 100 crore turnover. Okay, for employee salary around 50 crores. So next is for all other taxes, property tax, water tax, electricity bills comes under 20 crores. So 50 plus 20, 70 crores you got neglected from your turnover. So remaining 30 will be your net profit. So net profit depends on your revenue expenditure. Okay, next is types of deficit. So we have seen expenditures, receipts, and all. Now we are going to see what are the types of deficit. First of all, what is deficit means total outcome, outgoing minus total income. Okay, totally how much I am spending minus total how much I have got. That is the deficit. Okay, in revenue we have three types of deficit. One is revenue deficit. Revenue deficit means it pertains only to the revenue side, not capital side. Okay, revenue expenditure minus total revenue receipts, it's just a simple formula. Okay, so fiscal deficit, so government mostly focus on these two deficits, fiscal deficit and primary deficit. Fiscal deficit means total budget expenditure, which includes capital expenditure as well as revenue expenditure. Okay, minus total budgets, receipts. Total budget receipt means total income. You have to total all the sources of income you are going to add. So you are going to, it to be subtracted from your total budget expenditure. That will be the fiscal deficit. But the important point here is excluding the borrowings. Why we have to exclude the borrowings in fiscal deficit? To find the fiscal deficit, we should exclude the borrowings. I will tell you with an example. Suppose your salary is 10,000 rupees. Assume it your salary, monthly salary is 10,000 rupees. Uh, Due to some medical emergency you are going to spend 12,000 rupees this month. Okay, so 2,000 extra you needed. So what you will do, you will get it from your friend, correct? Friend or any known person. So those 2,000 will be the excluded borrowing from your friend or known persons. So your total budgeted expenditure will be 12 and 12,000, and your total budget receipts will be 10,000. Remaining 2,000, that 2,000 only comes as a physical deficit. Okay, suppose if you include those borrowings also in your receipts means 12,000 you are going to spend. Okay, then 12,000 you assume it as receipt, because 10,000 your salary plus 2,000 you got it from your friend. So 12,000 minus 12,000 will be zero. That will be not a valid calculation here. That's why we are excluding the borrowings in physical deficit. Next will be the primary deficit. Primary deficit is nothing but we are going to get some value in the physical deficit, right? Physical deficit minus interest payment on previous borrowings. Previous borrowings means already we have taken some loans or any payments we have taken from borrowed from other people or banks or other nation. So those for those funds we have to pay the interest, repay the interest, right? So those interest payments have to be subtracted from the physical deficit. Government always aims to make this physical deficit as zero. Okay, suppose in the same case you have 2,000 rupees as your physical deficit, right? In the previous example I have said, so 2,000 rupees. In this 2,000 rupees you are going to pay 1,000 rupees as your previous borrowings, because last year you may have taken a loan from any bank or nation. So for that you have to repay the interest rate, correct? So those interest rate getting subtracted it from the physical deficit. So 2,000, I am assuming interest payments on previous borrowing as 1,000. So 2,000 minus 1,000 is equal to balance 1,000 rupees you will get in your hand. So those 1,000 rupees, the remaining you will be getting in your hand is the other, is you will be used for other expenses other than interest borrowings. Okay, so government always tries to make this as zero. Then only it will be a financially stable economy. Okay, next is now we are going to the coming to the main part, that is union budget. So far we have just brushed up the basics of economics. Okay, to make your understanding and some little bit of quality also to make your understanding better in this union budget, because we cannot jump directly into the budget, okay, before realizing the terms and all. There is no use of directly jumping into the budget. That's why I have taken some little bit of polity and economics to merge it with the budget. Okay, the first one is union budget 25 to 26 for the financial year. Okay, from so the budget starts from April 1 to March 31st 2026. Okay, here the theme is Sabka Vikas. For every budget there will be a theme. Okay, theme means it's like a movie genre, some what do you say, thriller genre or romantic genre. The movie will be like that, right? The kind of genre like that. Likewise in budget also they will theme it as based on their requirement. Here in this period, for the current period, they are themed as Sabka Vikas. Sabka Vikas means development for all. It's a Hindi word, I think so, which means inclusive development for all, not only for any particular or specific person or group. It should be development for all the people. So that's what the theme is. And the union budget focuses on four important characters in this budget. Those four are these people. One is Garib. Garib means poor. Okay. Garib is also Hindi word, I think so. Garib means poor. Next is youth. Okay. The third is Annadatta. Annadatta means farmer. And the fourth is Nari. Nari means woman. Okay. So these four people are going to be main focus area in the budget. Main focus area, only focus area in the budget, because if these as per the government perspective, if we are improving these four sectors, four sections of society, then our nation will be a inclusive development for all the people. Okay, so we will see one by one. First, before going to the budget, before commencing the proposing the budget, the honorable finance minister has recited this famous saying from Telugu poet G. Apparao. Okay, what he said means a country is not just its soil, a country is its people. Okay, you can easily understand it from, because it is a simple language. A country is not just its soil, a country is its people. So by say reciting this statement, I mean this saying in parliament, then only she started to propose the budget. Okay, so it may be an important one to note it down. Okay, next is four engines of development. Okay, we have said, right, we have to develop these four sections of people. So for these four sections of people, government allotted four engines. So government actually what they do means these are the four engines they are assuming. Okay, and their destination point is Viksit Bharat. Viksit Bharat means 2047. Why 2047 is Viksit Bharat means after 100 years of independence, after getting independence after 100 years from British, we are celebrating it as Viksit Bharat. So before attaining this destination, what are all the progress we have made in our nation? That's what we are going to see. Okay, here they are assuming four engines as a vehicle to reach your destination, Viksit Bharat. Okay, for these engines, we need fuels, right? Fuels to run with the engine. Okay, the fuels will be reforms in tax system, reforms in GSTs, reforms in education sector, medical sector. So those reforms going to be the fuel catalyst for these four engines. So these four engines will drive us to our destination, that is Viksit Bharat. Viksit Bharat is nothing but 2047. Okay, we will see one by one the details. So other than this, six key areas of focus they have mentioned in the budget PDF. That is, one is accelerate the growth, which is an obvious term. Then secure inclusive development. That is the theme for this budget. And enhancing the spending power of India's rising middle class. It is the most important one. What is the spending power? What is enhancing the spending power? Enhancing the spending power means giving more money back to the people. How it is possible? By reducing the tax, correct? So the people will have more money in their hand. If they pay less tax means then more money in their hand. So more money means they will spend more in the nation. Next is invigorate private sector investments. What is invigorating? Invigorating means lending support or catalyzing, yeah, what to say, boosting private sector investments. Okay, giving confidence to the private sector to invest in our economy. Next is uplift household benefit sentiments. Okay, so these are all going to see. These are the bottom line of benefits we are going to get in this budget. Okay, we will see one by one. First engine we are going to see agriculture. As agriculture is the backbone of our economy, so that will be the engine one as per the union budget. So first is Prime Minister Dan Dhanya Krishi Yojana developing agri districts program. Agri districts program. So they have selected some 100 districts. Okay, in our India. Okay, so by choosing those 100 districts, what they are going to do is they are going to take care of those farmers. They are going to build FPOs. FPOs means farmer producer organizations. So they are going to give credit guarantee to the farmers. So these are all comes under this Prime Minister Dan Dhanya Krishi Yojana. It's a central government scheme to take care of the farmers. Initially, as a piloted implementation, they are going to cover first 100 districts, and it is likely to help around 1.7 crore farmers. Okay. So the next one will be enhanced credit through KCC. What is KCC means? Kisan Credit Card. Okay, it's a short-term credit benefit for the farmers. What is short-term loans? Short-term loans means the tenure for KCC is only 5 years. Okay, so as of now, currently the loan limit for KCC is up to 3 lakh. The farmer can take loans. Okay, but in this budget they have enhanced the limit to 5 lakh. From 3 lakh to 5 lakh they can get the loan from banks. Okay, with the backup support of government. Because in KCC, what is the difference between KCC and other loans? In KCC, the government will pay the subsidy. Subsidy means in your house you will get some gas for LPG. You are getting subsidy, right? So government is paying some amount to your bank account directly. Likewise, government is paying some amount to the farmers as part of their loan repayment. So this KCC will be useful for farmers to meet their short-term requirement. Short-term requirement means some farmers will have some land. Okay, so they might be in need of short loan amount to buy their seeds, to buy fertilizers, or to rent a tractor to plow the field. So for those requirements they need some money, some credit support, right? So bank is giving KCC as backed by, supported by central government. Okay, so far 3 lakh was the loan limit for KCC. Now it revamped to 5 lakh. And one more thing is in KCC, the collateral free loan amount is up to 2 lakh. We can get the collateral free loan amount. Collateral means without submitting any property or any submitting of ownership to the bank, we can get the loan amount from the bank up to 2 lakhs. We don't need to submit any property and any hypothecation to the bank to get the loan. Okay, above 2 lakhs only, the collateral plays the role in KCC. Okay. Next is National Mission on High Yielding Seeds. They're focusing on high yielding seeds. Why high yielding seeds? They are focusing. Yielding means the outcome. Okay, outcome of seeds they are producing more. Why means we are already crossed the population. Correct. To feed all the Indians, the yield should be more. The yield should be more within the less agriculture area. So they focus more on high yielding crops, high yielding variety crops, and they are doing gene biotics, gene modification, and all they are doing to make the output humongous so that they can feed all over part of India. So that's what the National Mission on High Yielding Seeds. Okay. Next is Mission for Cotton Productivity. So they have triggered 5-year mission to improve our cotton farmers. Okay, to livelihood of cotton farmers. Okay. Next is Makana board in Bihar. What is this Makana board? Makana board is that water lily seed only Makana in Bihar. Actually, it is an edible one. Okay, edible one. We can eat it. It will be like the texture will be like a popcorn. Okay, that Makana. But why they are promoting a board for it, for a edible product in Bihar? Because the process of taking makana and selling it to the market takes very humongous large efforts for the farmers. Those who are doing it took lot of time and lot of efforts to make it to the market. So what government going to do is they will give value addition to the makana. Value addition means they will procure the seeds, that makana seeds from the farmers. They will label it, they will seal it. Okay, so and marketing it in the FPOs. FPO means farmer producer organization. So by doing this, what they will get, what the farmers will get means, before these value addition and all, farmers getting very less amount from their dealers or retailers. Okay, but now government is intermediary in this, intermediary in this makana by setting up a board. So government is taking care of the farmers. So I will take this 1 kg of makana for 1,000 rupees, and I will sell it. And on the selling part, I mean on the selling profit, I will give you your earnings as per your efforts. Okay, so government is taking care of the makana farmers by setting up a board in Bihar. Okay. The next one is special focus on the three pulses. They have mentioned three pulses in this budget and launched a 6-year mission. Okay, three pulses are Tur Dal, Urad Dal, and Masoor Dal. Okay, so these three are going. These three pulses only they are going to procure more or produce more in the upcoming 6 years. Okay, because these are the reasons they have mentioned, like enhancing the protein content, increasing the productivity, so assuring the remunerative prices to the farmers. That's what I have already told in a different word. Assuring remunerative means to the efforts they are paying. I mean, the government is directly paying to the farmers as per their efforts they have done. Okay. So next one is India Post as a catalyst for the rural economy. Why India Post as a catalyst? To for an economy, for an Indian economy to boom, to grow, the government schemes and incentives and those beneficiaries should reach the last people. I mean last means remote, should reach the last man or woman in the remote village. So government cannot go directly to each and every part of village. Okay, so what they can do is they can assume a mediator. I mean, they can assume a middleman in this project. That will be the India Post, because India Post is available in every part of India. Because postal is very famous in remote side. Okay, if you want to actually postal can reach anywhere, even in the mountains, even in very unreachable places. They have branches, so that's why they have chosen India Post as a catalyst for rural economy. So to reach out the schemes to the public, directly to the public. So these will be our right hand, India Post, then all the public sector banks and public sector insurance companies. So these are all already available in every part of India, even in the remote villages. So government can use them to aware their people to what to say, to cover all the beneficiaries under one roof. So they are going to use India Post as a catalyst here. The next is DBT, cash out and EMI pickup. What is DBT? DBT means direct benefit transfer. Direct benefit transfer means there is no middleman involved here in paying the cash to the public. All the products beneficiaries will get their cash in form of DBT. DBT means directly transferred in their bank accounts. Okay, there is no middleman involved here. So the bribe amount or there is the looting will be reduced because there is no middleman here to take out the public money. All the money will directly go to the respective public account. Okay, credit services to micro enterprises. Credit services means giving loans. And then insurance, by tying up with India Post we can sell insurance. I mean, cross selling, they may say. Assisted digital services, and digital services means that Aadhaar enabled payment in the India Post or any Aadhaar PAN link. So those are all comes under digital services. So they have chosen this year India Post as their catalyst. Okay. Next is engine 2. We have completed the engine 1. Next we are going to see engine 2, that is MSME. MSME, okay. Here, the focus mostly on footwear and leather products. Okay, so there is a special focus for this sector to facilitate employment for 22 lakh persons, because these two sector, footwear and I mean leather sector. Leather sector means not only the footwear, it can be a wallet, belt, and bags and all comes under the leather sectors. So it has a capacity of 22 lakh persons we can employ it there to generate a turnover of 4 lakh crore. Okay, so what they are going to do is they will give the incentives. They will production PLI, production linked incentives to the these vendors, these markets for footwear and leather sectors. Next is the for the toy sector. Same goes as per the footwear and leather sectors. Here they are going to encourage the toy sector manufacturers to to procure their products to revamp their business. Why means to make India as a made in India brand. Okay, in every tie you can see there will be made in China, made in Japan. Very rarely you could see made in India. So that's why Indian government is pushing the toy sector by giving some benefits. Okay, that those details not needed now. Okay, what are the benefits you will see later. So by giving benefits, so the ecosystem will flourish in the toy sector. Next is support for food processing. I already told now, because why the support for food processing needed, because that will be the engine one. Agriculture farmer will be the engine one. To support them, we have to support their byproducts. Byproduct means farmers outcome is food products. Okay, so for the food products we need to procure, we need to keep it as a storage in a container or in warehouse. So those details, so those things comes under support for food processing. Okay, so next will be credit cards for micro enterprises. Customized credit cards with a 5 lakh limit for micro enterprises registered on Udayam portal. What is Udayam portal? Udayam portal means, wait, what this certificate means it just give you the details of the business which you are running. Okay, it is like an Aadhaar card for your business. Okay, it will tell you the details of your business, whether it is micro or what. It will give one unique number for this for your enterprise, for your business. And address details and all. What are the name of your building or premises or name of the enterprise you are running. Okay, so those details are included in the Udayam portal. So what is the purpose of doing this is to make sure the credit support given to the registered applicants of this Udayam. Okay, so they have run a separate portal for this. So those who are small, uh, medium or micro enterprises can register their organization in this MSME portal to get their registration certificate. Okay, so for micro enterprises, they are giving 5 lakh limit loan. I mean credit card loan they are giving. So already For KCC farmers, they are giving 5 lakh loan. Here also they are giving 5 lakh loan amount for micro enterprises, those who are registered on Udayam portal. So now you can understand only those who are registered in Udayam can avail this credit card support, correct? So that's why to what to say, to augment all the MSMEs, I mean to all the enterprises come under a single umbrella, that is Udayam portal. In first year they have planned 10 lakh such cards will be issued. Okay, so around they have planned for 10 lakh to be issued. Next is scheme for first time entrepreneurs. First time entrepreneurs means those who are going to start a business for the first time. Okay, mostly it includes women, SCs and STs. For if anyone belongs to these three category, any of these three category, and uh, going to start a new business for the first time, they are going to get a benefit of term loans up to 2 crore for the next 5 years. Okay, it will be a big support for them because these 2 crore, this term loan will act as a capital. Okay, capital, business paid up capital for their business, so they can invest these 2 crore in their enterprise to acquire property or to acquire machinery, to acquire plants and all, and then start the business. So it will be beneficial for these three people: women, scheduled caste and scheduled tribes. Okay, next is revised criteria for MSME. I have told you, right, there are three categories for enterprises, that is micro enterprise, small enterprise, medium enterprise, that is MSME. Okay, so the investment, if the investment is 1 crore in current period, the investment is 1 crore means that will be micro enterprises. If 10 crore na small enterprises. Now they have revised it to 2.5. If the revised, I mean, if the investment is 2.5 at current date means it will be micro enterprise only. It should be classified as micro enterprise. Why they have revised this 1 crore to 2.5 crore? What is the purpose of revising this means? You can see in the previous slide. See, credit card limit, the 5 lakh limit will be for micro enterprises registered on Udayam portal. So only for micro enterprises the credit card support will be. Micro means only up to 1 crore. Suppose if a person last year invested 1 crore, but now they have flourished and invested 2 crore means they automatically comes under small enterprises, so they won't get the credit card benefit. But in the revised one, even though the investment amount is 2 crores, they automatically comes under micro enterprises only, so they will get obviously the benefit of customized credit card of 5 lakh limit. Okay, so by raising the bar, they are including more people, they are accumulating more people under one classification. Okay, that is micro. So that's why that's what the reason for revised investment and turnover amounts. Okay, so to accumulate all the people. So the next will be government guarantee cover for MSME. What is guarantee coverage for? What is that? Guarantee cover means a third party who is not involved in the transaction is identified himself as a guarantor to repay the loan amount if the lender defaults. If you are not comprehending what I am saying, let me take you with an example. Suppose my friend, okay, who wants to build a shop, okay, build one business shop, wants to take a loan from a bank. Okay, bank is hesitating whether the business will be profit or not, whether he will pay the EMI correctly or not. So there will be hesitation in giving the loan. Okay, so in this time I am myself as a third party go to the bank and sign in the document as I am the guarantor for my friend to give the loan. So now bank will confidently give the loan to my friend. If the loan repayment is not doing correctly by my friend, on behalf of himself, I will pay the repayment to the bank. So here I am the guarantee only if my friend fails to repay the loan amount, which means default. In banking terms it is saying that if my friend default the payment, I will make sure the bank won't get any loss. So I am the guarantee cover for my friend. This is the same case here. For MSMEs, bank may hesitate to give loans because of his because of the volatility of the business. Okay, so in this case government plays a role as a guarantor by signing or giving the support to the MSME. So now bank confidently gives loans to the MSMEs because the MSME is backed support by government. So what else the bank needs? Even the government itself is giving the support, so they automatically give the loans to the MSMEs. Okay, so far the current loan amount was 5 crores. Now they have revised it to 10 crores. Up to 10 crores the MSMEs can get the loans. For startups they can get up to around 20 crores now. Okay, so I think we have covered two engines. One is agriculture, next is MSME. So we are going to see the third engine, which is investment. Okay, investment means not only the assets. Here the investments, what it portrays means investment in economy, investment in people, investment in assets, investment in everything, not only in the assets. Okay, that's what discussed in the budget. Okay, first is Atal Tinkering Labs. What is that Atal Tinkering Labs? Atal Tinkering Labs is nothing but a advanced practical lab in all the schools. Okay, 50,000 labs to be set up in the government schools in next 5 years. What is this advanced practical lab means? You can see some basic science experiments which has been involved in this Atal Tinkering Labs. Basic science experiments means pick and place robot. Pick and place robot means it will pick one product from this place and place it to that place. So it is like pick and place robot, and package checking robot, whether the package is sealed properly or not. If it is not sealed means it will put the sellotape and it will go to the next conveyor. So these robots are already being useful in the manufacturing industries for sealing the biscuit packets, for placing one biscuit packet into the tray. So these pick and place and sealing robots are already used in industries. So but those already deployed robotic system is not aware by the our students because they are small people, correct? So what government is doing is they are investing adult tinkering labs to make the students learn those things in the school itself. Okay, so that is what adult tinkering labs. And the next is center of excellence. They will call it as COE in artificial intelligence for education with a total outlay of 500 crores. They are investing around 500 crores in COE AI for AI to learn it. Okay, in COEs, adult tinkering lab is for schools. COE may be for higher education and college studies. Okay, the same kind, they are going to learn the current trends and current technologies in their academics itself. Okay, and the next is broadband connectivity to be provided to all government secondary schools and primary health centers in rural areas. Okay, next is expansion of medical education. So 10,000 new medical seats has to be added, going to be added in this year. The total target is 75,000. So out of 75,000, this year they are going to add 10 more additional seats in the medical seats. And then PM Swanidhi scheme. PM Swanidhi scheme means this scheme is for the street vendors. Street vendors means those who sell fruits in streets, those who sell kerchiefs and all. So they are called as street vendors. So there is a separate scheme for them to benefit them. That is PM Swanidhi scheme. What they are going to get benefit from this in PM Swanidhi scheme, they will get credit loans up to 10,000. Okay, minimum loan amount only, but that will be very useful. That was very useful for them during the COVID-19 period because COVID-19 there was high recession and the economy was down. So at that time, street vendors were one of the sectors they were heavily affected. So to lend the support of the government, they have introduced the scheme PM Swanidhi scheme to make the credit support to the street vendors. Okay, and the next is welfare of online platform workers. What is online platform workers means? Those gig workers means unorganized workers. That is like Swiggy, Zomato, those online delivery platforms, and the 10 minutes grocery platforms, Zepto, Instamart and all those delivery boys comes under online platform workers. So what the government is, they are educating those people to register their profile in e-shram portal. What is e-shram portal means? There is a separate portal for the unorganized people. See, government is trying to organize all the unorganized people under one roof so that all will get their own benefits. For example, if a person, if a delivery boy is registered in e-shram portal means on his retirement, on attaining the age of 60, he will get a pension minimum amount of at least 3 to 5,000 per month during his old age. Okay, so it will be like a social security scheme for all the online platform workers. So they have focused on them in this budget. That's also a good thing in this budget. And the next thing is Saksham Anganwadi and Poshan. Saksham Anganwadi means this one only in schools. They have that what to say, that nutrient giving food, right? Nutrient rich food. That's the only thing which comes under section Angamwadi and portion 2.0. And expansion of capacity in IITs. Capacity means seating capacity, which means admission is expanding, already expanding in medical education, now in IITs also. Then daycare cancer center in all the district hospitals. In this budget, many cancer related drugs and cancer related treatments have been included to offer the benefits for the patients. Okay, the next is Bharatiya Bhasha Pushtak scheme. Bhasha means language, Pustak means book, to provide digital from Indian language for school and higher education in all the languages. Okay, in all the Indian languages, they are going to translate their books in Tamil, English, Hindi, Odia, uh, in all the languages, in Marathi. So, in all the languages, they are going to translate the school books, so the students will get immense knowledge in their academics. Okay, that's the purpose of doing this one. And the National Center of Excellence for Skilling, it is same like COE only. Okay, the next is support to states for infrastructure with an outlay of 1.5 lakh crore, 50-year interest-free loans to states for capital expenditure and incentive for reforms. See, central government is extending their hand to give loans to the states. Okay, that is 50-year interest-free loans to states for capital expenditure. So, state is receiving the funds from the central for their own capital expenditure. Capital expenditure, it can be a building a property or building a bridge, so building a highway, national highway, so that they can collect toll fee from the next once the project is completed. So those all comes under capital expenditure. Next is Jal Jeevan Mission. Jal Jeevan Mission means tap water facility, fresh water facility to all the household. That is the Jal Jeevan Mission main aim. And to achieve 100% coverage, they have to achieve 100% coverage till 2028. Already they have covered around 5 to 6, I think so. Not sure, but around 4, at least 4 states I think they have covered, which means in that state all the house have the tap water facility, and it is portable. Portable means drinking water facility is available under the Jal Jeevan Mission. Next is power sector reforms. Power sector reforms means the what to say, they incentivize the players, those who are involved in power sectors like atomic energy, nuclear energy. They are going to release. They are going to what to say, delete the barriers in the power sector reforms, which I will tell you later in the next slide. Next is asset monetization plan 2025 to 30 to backup capital of 10 lakh crore in new projects. What is this asset monetization plan? Mm, Asset monetization is different from disinvestment. Okay, disinvestment is like transferring the ownership to the other person for the monetary benefits. Asset monetization means only transferring the usage, not the ownership. I will tell you with an example. Suppose I have a bike, okay, which I am not using nowadays. So it is an asset for me, but I should not keep it idle at home. It will deteriorate. Okay, so what I am going to do? I am renting it out to other person. For 1 month you can use it, but you have to pay me the rental amount. So that is asset monetization. An asset is there, I am going to monetize, but the ownership is with me. Once he used the entire month, he is giving back the bike to me, to myself only, with the rental amount. Okay, so I'm going to benefit, getting the benefit out of the asset, that is asset monetization. Disinvestment means I'm not using my bike no more. Okay, so what I have done is I'm going to give it to you, so I'm going to sold it to you. That is asset monetization, sorry, that is disinvestment. Okay, sorry. And the next is Urban Challenge Fund, 1 lakh crore to implement the proposals for cities as growth hubs, creative redevelopment of cities and water sanitation, just basic improvement in the cities. Okay, so that is 1 lakh crore has been proposed for that projects. Okay, next is Maritime Development Fund with a corpus of 25,000 crore for long-term financing up to 49% contribution by the government. Maritime Development Fund means improving the maritime harbors, those ports, those dockyards. Okay, so those things comes under the Maritime Development Fund. They have allotted around 25,000 crore for it. And the next is Nuclear Energy Mission for Viksit Bharat. See, amendments to the Energy Act and Civil Liability for Nuclear Damage Act will be taken up for active partnership with the private sector. Why this nuclear energy they are focusing? Because nowadays more AI has been usage, chat gpt, the grok AI, so many things they are saying. Okay, so those AI are going to be the next technology or current technology. So to invest the power source, to invest to utilize the AI properly, we need a proper power source. For the power, we are going to get it from the nuclear energy. So far, nuclear energy is under the government only, which means only the government can do the nuclear energy related projects. Okay, no private is allowed to do it. So now government is, because as per the Atomic Energy Act, sorry, because as per the Atomic Energy Act, only the government can do the atomic related or nuclear related dealings. Now government is going to make an amendment, may make an amendment to, for the private players to enter in this sector too. So last time, I mean recent, in the recent decade, they have allowed private sectors in space, correct? SpaceX and all coming now. So likewise they are going to allow the private players in nuclear energy also. Next is Udan. Udan means Uday Desh Ka Aam Nagrik, which means what to say, which means regional connecting of local airports with the international airports, which means connecting all the local airports. Local airport means some village in Bihar may have airport, but doesn't have the proper traffic in it. I mean, doesn't have the proper arrival and departure of flights. So they are going to connect it with the other airports to make the people to come from this to that. So the what to say, the transportability will be increased because of this Udan. Okay. And the next is future needs of bigger greenfield airports, financial support for the Western Kosi Canal ERM projects. What is this greenfield airports? Greenfield airport means there is no airport at all, only the place is there. The government is building an airport from the scratch, from the basement to completion of the project. That will be the greenfield. Okay. Then the other thing is brownfield. Brownfield means the project is already started and had some progress in it, but due to some reasons, there may be lending support or liquidity crunch, the project has been stopped. Okay, so after a while, the government is renovating that project. Okay, to make for the usage. That is called brownfield project. Okay, so greenfield airport is building it from the scratch. Brownfield airport is already the airport was there, so making a renovation or extension, so those comes under brownfield. And then Western Kosi River. Kosi River, one more GK is Kosi River is known as the sorrow of Bihar. Why means Kosi always creates floods and very much what to say, damages to the irrigation in Bihar. So it will be referred as Kosi is the sorrow of Bihar. Next is Swamic Fund. Swamic Fund. I think I have pronounced it correctly. Swamic Fund means special window for affordable mid-income housing. Okay. So 50,000 crore has been allotted for this Swamic Fund. What is this Swamic Fund means? To boost the real estate sector. Okay. So government has allotted 15,000 crore. How they boost it? So For example, if a real estate project has been started, okay, some building a flat or apartment, one person buyer is ready to occupy the home house once the project is completed. But due to some financial liquidity crunch, the real estate owner, the promoter, couldn't complete the project. So what will do? The owner keeps on waiting to occupy the project, occupy the house, but the real estate owner or promoter couldn't complete it because he doesn't have the enough support, enough liquid support, money support. So what will do in this case? The project has been stalled for years. Okay, so government what they have planned, I will give you the support, money support, liquid crunch support, so you can complete this project. So once the project is completed, this house occupier, he is ready to occupy the house, right? The person owner, he will occupy the house and he will pay the real estate, he will pay the amount, the acquisition amount to the real estate promoter or the owner. So likewise, here the two cases, one is real estate is flourishing because of the government support, and the middle income, I mean middleman, the public, general public is getting a house because of the lending support from the government. That is swarming fund. Okay, it has been maintained by, I think, SBI Capitals, I think so. And the next is PM Research Fellowship, to provide 10,000 fellowships for technological research for the young fellows, youngsters in IITs and IISs. IISc Bangalore is there. Okay. Then Gene Bank for crops, germplasm. I already told, right? For high yielding crops, they are doing so many high yielding seeds, high yielding variety crops. They are doing so many research. So these comes under those things only. Okay, to second gene bank with the 10 lakh gem plus some lines to be set up for future food and nutritional security. So they call it as a nutritional security. Nutritional security means to all the Indians should get their adequate nutrition and adequate food in the upcoming years. That is called nutritional security. Then Gyan Bharadam mission, which means translating all the scripts. Okay, and document it and making it into a digital one, which means all the manuscripts which has been written in that old palm leaf and coconut leaf and all they have written, right? So they are going to convert it into a digital form and make it into a cloud. Okay, so it is like preserving the heritage, because this handwritten may vanish one day, but the digital one may not. So that's why they are translating into a digital. Then allocating 20,000 crore to implement private driven sector research, development and innovation initiative. Okay. Then geospatial mission, national geospatial mission, using PM Gati Shakti, facilitation of modernization of land records, urban planning and design of infrastructure projects. What they are doing means uh, they are surveying of lands using the geospatial mission, using a drones. Okay, they are surveying of lands, and within this they are allocating the ownership of the respective surveyed lands. Suppose if the surveyed land is 1 acre and this 1 acre belongs to this person and the next acre belongs to this person, so the division, the what to say, the survey is doing properly with the help of this geospatial mission, so there is no dispute in the lands will occur. So that is the main outcome of this national geospatial mission. And the next is, we have covered engine 3 also. Next is engine 4, that is exports. Okay, this is the last engine. In these exports, what they have done is with the sectoral and ministerial targets to facilitate easy access to export credit, cross-border factoring support, and support to MSMEs. See, here also again they are going to help the MSMEs only. So it is a part of mission 2, sorry, engine 2, because here the MSMEs one, if the government gets the support of gets sorry, the MSME gets the support from government, so the MSMEs will do the exports without any fear. Okay, so the support means it can be a financial support or it can be backed support. Okay, next is Bharat Trade Net. They are going to build on international level Bharat Trade Net. They are calling it as BTN. Okay, and the next one is National Framework for GCC, Global Capability Centers. Okay, and the next is warehousing facility for air cargo. To facilitating upgradation of infrastructure and warehousing for air cargo, including high value perishable horticulture produce. So This point, warehouse facility for air cargo, this is going to indirectly help the engine one farmers only. Why? Because warehouse they are going to build for perishable products. Suppose from here India to Dubai, they are going to export one apple. Yes, let's say example an apple they are going to export some 500 ton means in the midway, the apple is a perishable one. Okay, it will spoil after a week or after 10 days. So in the midway they need to, if suppose unforeseen circumstances now, they cannot reach the they cannot complete their destination, reach their destination Dubai. So in the midway they are going to store it in a warehouse facility. So the outcome of farmers, that is the apple, 500 ton of apple has been preserved in a warehouse facility. So the products, the perishable products has been saved here. So it ultimately benefits the farmers only. Okay. Next is fuel for the four engines. Now we have seen all the four engines. Now the engines need some petrol or diesel, right? Those are the fuels. Okay. First is the Grameen Credit Score framework to serve the credit needs of SHG members and people in rural areas. What is this credit score? Before giving any loans to a person, bank may assess the person based on their civil score. Okay. Likewise civil score. Here the credit score for Grameens for rural people. Okay. So by using this analysis, the financial institution may give loans to them or not. They decide it based on this credit score. SHG means self-help groups. Okay, mostly they are focusing in rural areas only. Okay, next is NAB Fed to set up a partial credit enhancement facility for corporate bonds for infrastructure. Next is revamped central KYC registry to be rolled out in 2025. What is this central KYC? KYC means know your customer. Okay. Uh, Before anyone doing part in financial transaction, their KYC must be verified. Then only we will know who is initiating the payment, who is receiving the payment. Actually, then only we will know who is this guy. Okay. So KYC must be compiled in all the financial institution. Nowadays, they are centralized KYC. They are recommending centralized KYC means suppose I am a person who have a bank account with SBI. Okay, suppose example I am saying. So tomorrow, if I need to open an account in Canara Bank, I will go to the Canara Bank and giving my ID. Okay, if they enter in the KYC portal means the Canara Bank will fetch my ID details from the SBI because SBI already uploaded in the central KYC. Some from central KYC, it will be fetched to the transfer to the Canara Bank. So my details will be shared among all the public sector banks. Okay, not only public sector, other sectors also. Okay. Then rationalization of requirements and procedure for PD approval of company mergers. So there is a Competition Commission of India. There is a firm like that. They will be doing those mergers and acquisition, and they have their stipulated rules and regulations. So they are going to do some reforms in that sector also. And then FDI limit for the insurance sector will be raised from 74 to 100%. FDI limit means foreign direct investment. Okay, in the insurance sector they have, it's a important one. So far 74% only available. Now they have raised it to 100%, which means I will tell you with an example. 74% only allowed as of now, which means suppose to start a insurance business, 100 crore is required. Suppose taking an example, so 74 crore I don't have. So some foreign players will come. They will invest 74 crores. Remaining 26 crores I will put from my pocket. So me and the foreign person will collaborate to start a new insurance business in India. So this is the rule. Suppose if he has the more than 74 crores also, he cannot directly invest in India because the limit is 74 crores only, 74 percentage. Okay. But nowadays, here in going days, going forward, the foreign player can come directly without my support, without my participation. He can directly invest 100 percentage, 100 crores to start their own business in India. So what is the purpose of doing this is to acquire all the Indians to come under the insurance by 2047, because by 2047 insurance for all is the target of India. Okay. So one thing for achieving the target they are doing this, and the next thing is by allowing the foreign players and the foreign private players in Indian market. So it will increase the competitiveness among the Indian companies. So it will boost the sector. Okay. The next thing is high level committee for regulatory reforms. Okay, and then investment friendly index for states. Investment friendly index means there is a ranking will be done by central for all the states. Okay, so if any investor comes means they will see the rank. Okay, this Bangalore is having high index rate, so I can start my own startup in that Bengaluru because the support from the state was high. Likewise, the central is going to ranking all the states. So it will be beneficial for the investors to look into it. Okay, then the FSDC mechanism. FSDC means Financial Stability Development Council. There is a council, okay, which the chairman of this council is Honorable finance minister only. Okay, so they are going to what they are going to do is they are going to allot a framework to enhance the responsiveness for the development of the financial sector. They are going to work for the benefit of the financial sector. Okay, that's it. And the next one is Jan Vishwas Bill 2.0. What is the Jan Vishwas Bill? To decriminalize more than 100 provisions in various laws. Jan Vishwas Bill means in while doing business, okay, some activities may be considered as a illegal one. Okay, minor issues, but that can be uh, decriminalized. Government can say that those illegal is no more a illegal, it can be treated as a legal one. Okay. Why the government is doing like this? So the bill reduces the pressure on the judicial system. Okay, suppose some small petty cases will be against one enterprises, or because they have how to say transposed the law, or they have breached the law, or any small very not significant mistake, but something has been done by the enterprise means those has to be what to say those has to be comes under the court of law. If the court has have to deal with all these minute small cases means the burden of court will increase, so the hearing, the judgment on the case will be prolonged. So to avoid this, what government doing is this is not considered as a fault, or this cannot be considered as a illegal one. You can go ahead. Okay, you can go ahead, or by paying a penalty you can go ahead. So likewise, decriminalizing 100 provisions in various laws, government is helping the MSMEs and business enterprises to do their part in the economy. Okay. So the next will be indirect tax reforms. In marine products, they have reduced many customs duty from 30 percentage to 5 percentage in marine products, and then in drugs also. So far, 36 life-saving drugs are exempted from zero customs duty for those drugs, and mainly focus on cancer and rare chronic diseases. They have reduced the customs duty to 5 percentage. Okay, and the next is patient assistance programs and all. You can get it from the definition itself here. Okay. Next is leather sector, full exemption of BCD on wet blue leather. Wet blue leather means it's a ready-made base material for doing any leather products like leather belt, leather clothing, apparels. So it will be the base material. So it's a ready-made one. So for importing that, we will be having full exemption of BCD. BCD means basic customs duty and blue leathers. Okay, so these are all the things they have done in indirect tax reforms. Mostly the significant things. Okay. The next is direct tax. Okay, direct tax reforms. As in this video, we already mentioned the government's move for the for increasing the expenditure power of middle class and all the people. So, like in what way? In by doing this tax slab reforms. Okay, so in this budget, this is the highlighted one. No taxable tax should can has to be paid up to the income level of 12 lakh. Okay, 12 lakh means in tax terminology you can say it as rebate. Okay, 12 lakh is a rebate. Suppose a person is earning 12 lakh means he doesn't need to pay any tax to the government for the upcoming financial year, that is 25 to 26 financial year. Okay, and the standard deduction raised to 75,000. What is the standard deduction? Standard deduction means a discount from the government side after the rebate. Okay, suppose a person, you can take it myself. Okay, suppose I am earning 12.75 lakhs per annum, which means 12 lakhs 75,000 is my salary for an year. Now I no need to pay any tax to the government because already 12 lakh is neglected because of the rebate. Okay, then also I have a discount. Standard deduction means you can call it as a discount for a better understanding. 75,000 will be reduced. So all my salary 12.75 will be my salary getting neglected to zero. So which means I no need to pay any tax to the government. See, this standard deduction will be applicable only for salaried professionals. Okay. So in this budget, what we can conclude is up to 12.75 lakhs, those who are earning, no need to pay any tax. Okay. Sir, you have told like up to 12 lakh there is no tax, but here you can see 4 to 8 is 5 percentage, 8 to 12 lakh those who are earning is 10 percentage. What is this calculation? I am getting confused here. See, I will clarify this. Okay, suppose you are earning 12 lakh means after the rebate, your salary will be zero, the taxable salary will be zero, so you need no need to pay any tax. Suppose your salary is 16 lakh. Okay, now what you will do in this case? If your salary is 16 lakh means for the first 0 to 4 lakhs there is no need of tax. For the next 4 to 8 lakhs you are earning, right, 5 percentage has to be paid. 8 to 12 lakhs 10 percentage, and finally for the last 4 lakhs which you are earning 12 to 16 you have to pay 15 percentage as a tax. Which means if you are earning more than 12 lakh means you have to pay all the tax slabs. Okay, first you pay this one, then you pay this one, then 12 to 16 lakh you have to pay up to 15 percentage. Okay, suppose you are earning within the rebate amount, which within the 12 lakhs the tax will be zero. Okay, now you can understand that once your income goes beyond 12 lakhs you have to pay all the slabs. Okay, 5 percentage, 10 percentage, 15 percentage. Suppose you are within the slab 12 lakh means you no need to pay any tax. This is the tax calculation. Okay, and tax is a, I already said, progressive one, which means based on your income. If your income keeps on increasing, your tax also keeps on increasing. So tax, direct tax is a progressive tax, whereas GST, indirect tax, is a regressive tax, which means if your income is keep on going, your tax is keep going to be unchanged or keep on reducing. How means, if a person, if we compare two-person, one is a millionaire who is having net worth of around many millions. Okay, and the other person is normal person who is earning 1,000 rupees per month. Suppose both are going to a market. Okay, and buy one Cadbury dairy milk. Okay, 10 rupees, which will be, both will pay the 10 rupees only. Okay, the millionaire will pay the 10 rupees, and the boy who is earning 1,000 rupees per month is also going to buy the same Cadbury milk for the same 10 rupees. Now the 2 rupees will be the indirect tax. Let us assume out of 10 rupees, the 2 rupees will be the indirect taxes, which is going to be paid by both the millionaire and the boy. So in this case, the 2 rupees won't be a matter for the millionaire. Okay, because his net worth is huge. But whereas for the boy, the 2 rupees may be a concerned one because his income is less. So when the income is more, the indirect taxes may be regressive. But in direct taxes cases, if the income is more, based on your income, your tax will progress. Okay. And the next is reduction in rates. TDS will be rationalized by reducing rates, limit raised to 1 lakh, and TDS on rent to 6 lakh, benefiting small taxpayers. Okay. What is this? TDS means tax deducted at source. So for up to 20,000 per month, for suppose uh, you are having a house. Okay, you are planning to rent it out to some tenant. So up to 20,000, if you are renting it out means no need of paying any tax. Suppose you are quoting the rent amount as 22,000 and tenant paid you 22,000 means 10 percentage of 22,000 will be deducted as TDS, okay, to the government. So, so far it was like that only. 20,000 up to 20,000 only. There is no TDS in rental, okay, rental homes for the owners. Once the 20,000 breached, the TDS will be applied on the rent. So 10 percentage of the rental will be go to the government. Remaining amount will be paid from the tenant to the owner. Now the rent increased to 6 lakh. 6 lakh means up to 50,000. 50,000 correct? Now up to 50,000 per month rent can be given with no TDS. You got it up. So before it was only 20,000. Now up to 50,000, 50,000 you can rent your house with no TDS. The next is threshold to collect tax collection at source on remittances. TCS, they will say tax collection at source. Under RBI's liberalized remittance scheme is proposed to increase from 7 lakh to 10 lakh. What is this liberalized remittance scheme, LRS? This scheme will be useful for the persons who are remitting money from India to abroad for the purpose of higher education, for the purpose of doing any medical surgeries or any medical expenses. So money will flow from India to other country. Okay, so there will be a that term will be called as LRS, which means for the money you are paying, you have to pay the tax. Okay, that is tax collection at the source. So far up to 7 lakh there will be no tax. For example, within 7 lakhs you are sending to America means there is no need of paying any tax. So now they are increasing the 7 lakh to 10 lakh. Now up to 10 lakh you can send money to anywhere out of India, no with no tax. If you are uh, if you are sending more than 10 lakh means the taxes will be applicable for the amount which you have sent. Okay, and next is decriminalization, which we have already seen. Okay, the next is voluntary compliance, proposed to extend the time limit to file updated returns from current limit of 2 years to 4 years. Updated returns in IT filing nowadays they have current limit of 2 years. Okay, 2 years to correct their previous filings. Okay, suppose you in this year you have found that last year I have filed improperly, filed incorrectly. So I can make it correct and rectify it and file it again. So up to 2 years it was possible as of now. But from April 1, it will be up to 4 years. Before 4 years you have done mistake, you can correct it now. Then you can file it again. So from 2 years to 4 years, it has been increased. So it will be beneficial for the taxpayers to mitigate the mistakes, to avoid the mistakes or to correct their mistakes. Okay. Next is we have come the climax part of the budget. So this will be the graph of the receipts and the expenditure. See, the receipts 27.3 was the actuals. Okay, but the budgeted estimates was 31.3, which means they have allotted 31.3, but they have but they have actually expenditure, sorry, receipt was 27.3. So the revised one was 30.9. Business budgeted estimates means I am estimating something that this much amount is needed for this project. Okay, then revised estimates means during, I mean at the final stages of the budget, I feel that the final stage of the financial year, I feel that this much budget is not needed, or this much budget is very low for this project. I need some more amount, so I will revise the budget. That is revised estimates. Okay. Next is for this year we have given budgeted estimates 34.2. So same likewise goes for all these capital expenditure, revenue expenditure and all. Okay. One is actuals. Actual means the exact expenditure or receipts which has done in the financial year. Next is budgeted estimates means before actuals incurred there has to be a budget, right? They have some budget, which means this year I am going to save and get thousand rupees as a profit. Okay, they have budgeted estimates. But due to some business loss, they have got only 800 only. That will be the actuals. Okay, that means the actual outcome, actual results. Okay, revised estimates means they first initially they have mentioned like 1,000 rupees I will get the profit, right? But during the year end they have calculated it, I don't get 1,000 rupees, I don't think so. Okay, so we will lower our bar, we will lower our benchmark to 900 rupees. I will get the profit. That is the revised estimates. But overall they are getting only the 800 rupees as their profit. That is the actuals. So 800 will be the actual estimates, 1000 will be the budgeted estimates, 900 will be the revised estimates. I hope this just a small example to make ensure that you don't have any confusion in these three times. Okay. The next is deficit trends. Government always tries to, in every financial year, they tries to suppress. I mean, what to say, decrease the deficit. Okay, so that's why the graph was low like this. They always try to make it as zero deficit. Okay, deficit means if there is the deficit is zero means whatever government is getting from taxes they are spending it. Okay, there is no external borrowings, so there is no interest payment for some other third person. So government is running with the all the income and the expenditure. Okay, there is no need of external borrowings, so the fiscal deficit will be zero. Next is rupee comes from and rupees goes to. Here the which means for every 1 rupee the government is getting from taxes or other incomes, uh, they are segregating it how that 1 rupee is coming from where. Okay, for example 24 percentage coming from borrowing and other liabilities only, which means any loans, grants we are getting from other nations, other banks, foreign banks and all, those comes under, those occupies the topmost 24 percentage in our budget. Which means our all the rupee which in our hand, I mean in the government hand, 24 percentage majority of the parties because of the borrowings. Now the next is income tax is 22 percentage. So after the borrowings the government's basic, so other source of income is income tax only. Now coming to the rupee goes to, for example this much amount 100 percentage they have got from all the sources. Now how they are going to spend those expenditure. Okay, first will be the interest payments, sorry, state shares of taxes and duties. First they will pay the states for state allocations amount. Next will be the interest payments because we have borrowed much from the 24 percentage. Okay, much percentage in borrowing only, so we have to pay much percentage in interest payments. So where the money comes, it automatically goes to that part only. Okay, that is interest payment. And the next is expenditure of major items. Okay, so this will be just a basic, you may get one or two, one maybe one question from this. So for this difference is the first and foremost expenditure they have allotted, which is 4.91 crores. Okay, sorry, for not 4.91, yes. You can memorize only the first three digits is enough. 2.66, 2.33 is home affairs. Likewise, you can memorize it easily. Not the whole thing is needed because you can sort it out from the options in the exam hall if you have seen 2.66. Okay, so you can take a look up out of it these department wise allocations on budgets. Okay, so I have covered enough things in this. I have spilled all the things which I have known about the budget. If you have any other queries, you can make it out in the comment section. I will try to sort it out. Okay. Thank you. Bye.